Have you ever felt like the biggest opportunities in the stock market are the ones you never hear about? Today, I'm going to show you 4 overlooked stocks that most investors are missing right now. First up, Tetra Tech. You might not know this name, but Tetra Tech is a powerhouse in engineering and environmental consulting, focusing on water, sustainability, and digital automation. The company absolutely crushed expectations in its latest earnings, beating both revenue and profit forecasts while maintaining strong financial health. In fact, Tetra Tech's operating income shot up 37% year over year. They are ramping up cutting-edge digital automation and aiming for $500 million in annual revenues from this alone by 2030. With $4.5 billion in annual revenue guidance for this year and consistent dividend growth for more than a decade, Tetra Tech is uniquely positioned to benefit from the global push for better infrastructure and water solutions. Despite all this strength, the stock is still underpriced compared to analyst targets, offering clear upside potential, especially as state and local government infrastructure spending continues to rise. The company's push into digital automation isn't just a growth lever. It also makes Tetra Tech an early leader in applying AI and data analytics to infrastructure projects, positioning it ahead of traditional engineering peers. As the world faces unprecedented needs for water security, climate adaptation, and electrification, Tetra Tech's innovative mix of technical expertise and digital strategy could deliver outsized returns for forward-looking investors. For those seeking both stability and growth in the environmental sector, Tetra Tech stands out as a compelling opportunity. Now, let's talk about Nebius. Nebius is a relative newcomer in the world of cloud infrastructure, but it's making serious moves. With major investments in GPU-based cloud computing and support from industry giants like NVIDIA, Nebius is helping to build the digital backbone for artificial intelligence in Europe and the US. They're quietly expanding with new data centers to meet explosive demand for AI computing power. While the company isn't making front-page news, this is a classic case of strong fundamentals meeting a massive technology wave. And being early could mean enormous returns down the road. Of course, as a new player, it comes with higher risk, but the upside is almost unmatched if they capture even a slice of the AI infrastructure market. Nebius has distinguished itself by building and operating its own advanced data centers filled with cutting-edge NVIDIA GPUs, supporting AI workloads from startups to large enterprises and research institutions. The company's cloud platform is designed specifically for AI applications, combining the scalability and flexibility of hyperscale cloud services with the performance akin to supercomputers, which appeals strongly to customers running large machine learning models. Nebius also partners with specialized data platform providers like WEKA to supercharge storage and data throughput, enabling ultra-low latency and efficient AI model training. This integrated approach sets it apart in a market otherwise dominated by tech giants like Amazon Web Services, Microsoft Azure, and Google Cloud. Next, we have APA is a company at the very heart of the energy sector, focused on exploring and producing oil and natural gas, with several significant new discoveries adding to their reserve base. What makes APA a compelling buy right now? They've recently reported strong quarterly earnings that surpassed analysts' expectations, signaling solid operational execution even amid a challenging commodity price environment. Additionally, APA has reinstated its dividend after a previous pause, a move that demonstrates management's confidence in the company's cash flow generation and long-term profitability. The company has also improved its realized prices, meaning the prices they actually receive for their oil and gas sales, which highlights their ability to optimize sales strategies despite global market fluctuations. APA's growth outlook is fueled by substantial investments in developing new reserves and exploration projects, particularly in key basins such as the Permian and the Eagle Ford shales, which are known for their productivity and relatively low costs. These projects position APA well to increase production volumes over the next several years. Moreover, APA has been focused on operational efficiencies, cost control, and technological advancements that enhance drilling performance, which together improve margins and resilience against price swings. And here's the kicker. While the oil and gas commodity markets are inherently volatile, APA's operational improvements, disciplined capital allocation, and strong recent earnings provide a financial cushion that could enable the company to capitalize on any future tightening of energy markets. If geopolitical tensions, supply constraints, or increased global demand push oil prices higher, APA is well positioned to translate those conditions into strong revenue growth and shareholder returns. For investors looking to gain exposure to the energy sector with a company showing both growth potential and dividend income, APA stands out as a solid candidate with a more defensive profile compared to smaller or more speculative producers. And finally, Conduent Incorporated, traded under the symbol CNDT. Conduent is a small-cap company focused on business process outsourcing with clients in commercial, transportation, and government sectors. The company has recently improved its balance sheet through asset sales and debt prepayment and is simplifying operations to focus on growth. Its commercial segment is gaining strength, and partnerships like the one with Bank of New York Mellon signal potential expansion. Given its low price-to-sales ratio and operational restructuring, Conduent is considered a value stock with upside growth potential, though it carries risks from the industry disruptions such as AI impacts. The reality is, everyone was overlooking stocks like Nvidia when it was just kicking off. People did not see the vision of a company like that. Hell, most people didn't even know Nvidia existed, just like the companies I've shown you today. Now look at them. Whoever invested in Nvidia and held their shares is probably a millionaire. So, what's the takeaway? With Tetra Tech, APA Corporation, Nebius, and Conduent, you're looking at stocks that are flying under Wall Street's radar. They're higher risk, yes, but the reward potential is like catching a wave before anyone else sees it forming. As always, do your own due diligence. But if you want to aim for life-changing gains, sometimes you have to be willing to jump into the overlooked opportunities while everyone else is still asleep. Thanks for listening. And remember, sometimes the most powerful investments are the ones you never hear about until it's too late.